All right, so what to expect throughout the day today? First of all, we're going to start with the pre-market game plan to see on what page we are. So we're going to analyze NASDAQ, the S&P Russell, the Dow Oil, gold. We're going to take a look at bonds, VIX if we have time throughout the day. But yeah, the VIX we're going to analyze based on what kind of market environment we're going to have and based on volatility. We're going to be analyzing the current market context, like in general, and see, what's dominant, whether we're bullish or bearish or what the context is. We're going to take a quick look at the news and the impact of news. We just had the CPI data. You could see the charts, the price action just zipped higher. And that's a good thing for us because we're already in a swing trade in the E-mini S&P from 63.80. So we just made a whole bunch of money right now. And we are going to also take a quick look at earnings and the potential impact. We're going to take a look at the stocks that have already reported earnings and how these stocks are going to impact the market. But that is going to be after the open. So I'm going to do that analysis as we go into the open. Obviously, we're going to try to identify opportunities for trading. We're going to wait for the trade setup to form. I will walk you through the price action process from the open. And once again, I want to emphasize the fact that if, let's say, we're going to get a really crappy session, if there's not going to be any kind of setup that will line up, then we won't have a trade. It's easy as that. If we have a setup, we have a trade. We don't have a setup, we don't have any kind of trades. The trades will be identified at least 2 to 5 minutes before the trigger, so you have plenty of time to place your orders, to place your limit orders. I only trade with limit orders. I don't jump in. I don't buy anything at market. And of course, we're going to be determining the parameters of the trade live here. So you're going to have a first-hand look and how we identify the setups. So you're going to take a look at some strategies that we use here based on the price action that we're going to get for today. You're going to see again live trading and live management. And at the end, we're going to have a quick recap of the session and the trades that we have been into. Luckily. Okay. Now keep in mind there's a big red flag this week. This is the option expiration week. So what to expect? Number one, increased volatility. This is a really big thing because you're going to get whipped around a lot. You're going to get unusual volume spikes. So look at those smaller time frames because if you're going to have like crazy price action, you're likely going to get a lot of topping tails and a lot of bottoming tails. And this is the first sign of volatility that you're witnessing when you're looking at price action. You're going to get magnet to strike prices. And that's as we're going closer and closer to option expiration, which is on Friday. Do not trust price action blindly. There are going to be plenty of setups that are not going to be working this week. So just a heads up on that because the price action is not going to be true to technicals. And the technicals are going to have a little bit are going to be a little bit off. So you're going to probably find like a really great setup. And if that setup may not work. Okay. Stops are going to be often because there are going to be multiple shakeouts that are going to happen throughout this week, unpredictability of price action direction. And usually with an option expiration, you're going to see a big up move. We just had it right now with the CPI numbers. Typically, you're going to see like for the whole duration of the day, like a continuation of the move. And then the next day, it's very possible that you're going to have a range bound action. Or you could have the range bound action into option expiration into Friday. So it's very much, it is a possibility to have that. Although we have some other important numbers that we're gonna get on Thursday. But it is a possibility that we're going to have a range bound action for a couple of days and then we're going to have a down action. This is typically what it happens because, you're getting the pinning of price. And again, the price action is not going to be true to technicals. That's going to be a really big deal. Now, economic events for today. This morning, we just had the CPI numbers and we have an FOMC member that is going to be delivering a speech at 10 o'clock. We have the federal budget balance. It's not going to impact the market and the API numbers. These are the oil numbers that are coming in at 4:30. Again, it's not going to impact the market. It's going to impact probably oil. So CPI data. We just released the CPI data. So I thought, you know what, let's put together something for you guys, just before we get into our analysis to see what CPI is all about. in case you don't know, if you're here for the first time or if you don't know what the CPI data is about. So the day before the CPI data, and we had this in yesterday's trading session, what we noticed is that we had lower volume and compressed ranges, right? You saw that from the daily candles when we closed, there were inside candles, right? So we were trading in the range from Friday. This is very, very typical. We actually had a trade yesterday in NASDAQ. It actually flew up like 20, 30 points or so, but then we closed it at break even because it was range bound. So we didn't want to risk anything else because we knew that this was going to happen, right? So institutional posture, like big funds, banks, hedge funds, often reduce position sizing or hedge exposure before the CPI numbers to avoid getting blindsided by a surprise number. Okay, so that's what typically happened. Now, what I've noticed in yesterday's trading session is the fact that the institutions didn't really leg out of trade. So maybe there were some whisper numbers out there, but the market is still very, very robust. It's still into a dominant power trend. So here's the impact on price action. You're going to get a range contraction. And this is exactly what we had in yesterday's. Daily candles often show small ranges. And I told you about the daily candle that was inside Friday's range. You get choppy sideways moves for indices like Q Spice Diamonds, obviously for futures indices as well. And they drift without any kind of conviction because they don't have a reason to push or to pull. So you get that choppy move and you get fewer breakouts and follow throughs. Traders don't commit capital. And I mean institutional traders, not us that we trade from home, right? Okay, so the morning before the CPI numbers, so we just witnessed this around, so this is before 8:30. You're going to see the overnight futures trade slightly in a wider volatility. You probably have noticed that 2 to 3 minutes, or actually 10 minutes before the open, because I was here and I was watching it, you saw like a lot of volatility already come in, and you already saw a little bit of push up into the market. You have liquidity pockets and you have positions squaring as well. And you don't often see price gravitate towards a short-term equilibrium, such as support resistance. You just float around chaotically. Now, sentiment positioning. If the prior CPI data was hotter than expected and drove the sell-off, traders may lean cautiously bearish into the release. If the CPI has been cooling, optimism can creep in. Take a look at the optimism that we're having right now, and the price is rising, right? And then you're getting the options market like the VIX, implied volatility usually creates a big move, right? And we saw the big move that happened in the market right now. Look at the indices, right? So I have them here up by side. You're going to see them in just a few seconds. So key takeaway from this, right? Before CPI data, the stock market, along with the futures market, will be actually reacting as a coiled spring, and movement slows down, volume lightens because nobody wants to trade the unanticipated numbers, right? And you're getting a volatility contraction. So the real action usually happens after the numbers are out. And you saw that impact right at 8:30 when the numbers were out in the first second, 10 seconds, 50 seconds. That is when the volatile move happens. So the best setups often happen again after, and they also give us another entry opportunity after the New York trading session opens. Okay, now earnings, in terms of earnings, today's Tuesday. Before the market opened, we didn't have any high impact releases. These are the stocks that have reported earnings. I don't see any big power player, and we're not going to have any big power player on after the close either. But it's great to actually, kind of like have an idea what is going on. And right now we're going to start sharing the trading screen to see what the heck happened into the open. So just give me a quick yes if you guys can see the screen with the charts. Just give me a quick yes right here. Okay, perfect. All right, that's perfect. Okay, that is absolutely perfect. All right, so what we're gonna do right now, I'm gonna stop the camera here because you don't really want to see me, but you want to see the charts, and I gotta get ready for that. All right, so let's see here. All right, so I'm going to hide the video panel and we're going to get right into action right now. We have about 10 minutes as we go into the open. All right, so the Dow here is already up 158 points, exploded higher, and it had a peak into the 350. We're going to analyze it in a quick second. And we're also seeing an equilibrium with the mini S&P, 0.36%, 0.36% in the Dow and S&P as well. We're seeing a little bit higher numbers in NASDAQ, 0.42% of the open. I love the setup right here, like tons of dojis right ahead of the open. We have 10 minutes to go into the open. And we have Russell here that is contracting as well, 0.72, a little bit more advanced than the rest of the majors. We're seeing here gold, $11 down, and we're having oil back down below $64. So again, closing in on 63 again. It is down about 49 cents, 0.77% right now. So what we're going to be doing right now is we're going to start with a macro analysis, and we are ready to go. Let's start first off with the Dow. And the Dow, as you can see here, it has been in a massive range, right? This is the 1 hour chart. This is the daily chart right here. And you can see that very clearly we had a little bit more volatility at the beginning of August. And right after that, the price action has been contracting. So it's exactly what I did mention to you guys before, that we're going to witness some kind of contraction in price. So this is actually a really big base. The line in the sand is here into the 44,500. And if the price is going to get through this 500 throughout this week, or whatever it's going to get throughout this week, if we hold the base, this is going to be very bullish, and this is going to drive the price to 45,000, and obviously to the prior high of 45,312, which is the all-time high that was recorded on July the 28th. Also, notice that the price action on the weekly is trading inside week. The price action is trading above the 10 EMA. This is bullish, above the whole number at 44,000. Remember, option expiration week is going to have a big impact on these. And we're going to talk more about option expiration as we're going into Wednesday. This is actually a little bit more contraction that we're seeing here that we would have liked. Again, the line in the sand is going to be over 580 here, very close to 600. So if we take out the 600 here, we're going to enter a velocity spot. Velocity pocket that's going to take the price to 200 and maybe into the all-time high of 312. For today, the Dow just traded above the 200 simple moving average right here. Now it's coming in. Now I have seen CPI numbers and PPI numbers that were, the market loved the numbers, interpret them as really, really great numbers. However, what truly happened is that they came back completely and erased all that data release. They came 180%. They did a 180 down. So they popped up, and then they were a 180 down, and they actually continued lower, believe it or not. I have seen this, and it was not far away yet. Even last year, we had some of these occasions where the price action popped up and then it erased everything. So we have to be very careful. The Dow is totally not going to be one of my favorites, because it's not trading into a velocity zone, and it still has a lot of resistance in the overhead into the 400. Now, let's take a look at the mini S&P. The mini S&P looks a lot better, setting up a sandwich onto the daily. That means that the bears here are getting, bam, squeezed out. You can see here we had a little tiny pop up here into the 64.40, just above 64.40, 64.42. And just eliminated all the resistance. So it tested the resistance, it cleared the resistance, but it really needs to form a setup that will break resistance. So at this point in time, the price action is still trading into that resistance. This is just a pop-up from the news, but this is going to be one on our watch list. It's dominant. It is actually into a velocity spot here onto the weekly. It's trying to do a continuational pattern onto the weekly. We have a sandwich trigger onto the daily, so we may have some algos that are going to help with the move. So we're got to be very careful to see if the price action is going to pull back. Where is it going to pull back to? So from the hourly, you can see here that we're trading into a minor support level. And that minor support level is derived from this prior peak high and from this cluster high as well. So this could be a potential area here into the 2064.20 where the price action is going to rotate. But we're going to have to wait and see. Without proof, we're not going to lift a finger. If we're not, and if the price is not going to defend the 64.20, guess what? The price is going to come down to 64.10 area. 64.10 area is the next support spot for the E-mini S&P. So it's going to be like live and tell, right? Okay, let's take a look at NASDAQ. This is, again, one of my faves. It's trading very, very close to the all-time high at 845. The price action did a high of 822.25 and tested the resistance area, and it's slightly pulling back right now, and it's pulling back into this cluster here that we have been in yesterday's trading session. If the price action should pull back more in the New York trading session, and again, the open is going to be carried, it's going to have tons of volatility because you can imagine like the overnight price action reacted, but the New York trading session market did not react. In fact, it didn't even open yet. So you're going to see a massive reaction off of the open. That's going to be very interesting. But Dow, I would have to say Dow is not one of my favorites. Out of the S&P and NASDAQ, I would say that NASDAQ is one of my favorites right now. And Russell is one of the most advanced indices right now. It tried to break above this range, but the price action on the daily is still below the 20 SMA. That's a big problem for me because I don't like to trade with the 200 SMA overhead on the daily. But in fact, you could see here that it tested the resistance, these prior double top highs, and it pulled back a little bit into, again, a minor support level, but it's within the base. Because if you look at the left-hand side, we have a big resistance area and we have a big support area, and we have been yo-yoing around between this resistance and this support. Weekly, looks like it wants to go a little bit higher. Let's take a look at Goldilocks. Gold doesn't look that good, I have to say. Like, if we base here longer, this is gonna be a death cross, so it's gonna have more of a bearish connotation than anything. It already had a two-day pullback, and gold definitely is trading again, just like Russell, into a massive resistance level and a massive support level. Okay, so at this point in time, base. It's literally basing. It's not doing anything. It could, and I wouldn't short it because it has the 10 EMA right here, and this could be a reactionary area into the 70s or the 80s. So we're just going to leave it as is. I'm not going to focus on either gold or oil today. You could see oil here just gravitating. This could be actually a bear sandwich. It could be bearish under 62.70 or 62.60. Other than that, it's trading under a lot of pressure. It has minor resistance, massive minor resistance right now into the 64 65, and it has all the moving averages overhead. So it's kind of like really difficult. All right, so this is it for the pre-market game plan team. I'm ready to rock and roll. We're going to be waiting for the open. We have 2 minutes to go. Again, no questions in the first hour. We're going to have time for plenty of questions afterwards. Right now, this is our time to make money. Ka-ching, ka-ching. So let's get ready. Get your platforms ready. Get everything ready, your charts, and we're ready to go in a couple of minutes. So I would have to say that one of my favorite is NASDAQ. It could go immediately higher based on the 15-minute here. We're going to be closing this candle in about 1 minute and 20 seconds. Don't forget to position size. The size of the trade does not matter. It's your ability to take the trade that matters. If you can take it or not, your risk tolerance, your position sizing. That's key. We do have the 10 EMA in NASDAQ, just a little bit of into this whole number here. We have the 200 SMA right here, very tight into the 80s. So we have 20 points between support levels. It could pull back a little bit more. So what I'm afraid of right off the open here is that we may get like a shake and bake. So what that means is that we could get like a trigger, like an immediate trigger, but then afterwards you get filled and then it goes like a little bit higher and then boom, back down. So I often saw this with CPI numbers. Also, throughout this week, it is advisable based on your personal risk tolerance to trade half the size because the price action is not going to be true to technicals. Remember, we're trading into an option expiration week. More about option expiration and trading futures throughout this week. Whoops, sorry about that. I forgot to mute my speakers. My speakers are mute right now, so you don't hear all the ding, ding, dings. All right, the market just opened, trying to push higher. All right, this is the first Momo that I've been telling you guys about. This is the risky part. I'm liking NASDAQ. See, I like NASDAQ into this area right here, into the 750. It went to 750.5. The stop is going to be 720. If we have a trade so far, we're just watching. Going to put this back on the 5-minute. So keep an eye on that 750. Get ready. We're going to focus on NASDAQ. Russell is pulling back a little bit more. We have about 40 seconds into the close of the first 2-minute candle. We have intraday resistance at 760 FYI. All right, the price action breaking below 720. That means that our stop is going to be totally different. At this point, it looks like 700 for the stop. Don't have the entry just yet. Again, the focus is NASDAQ. All right, we have our first trade, NASDAQ long 755 with a stop 700. What I usually do is I put my stop just a couple of points below 700, not exactly at the whole number. The 2-minute has also, the 2-minute price action, New York trading session charts come with support from a 200 SMA, which is around the 720. Not quite, but around the 720, so that's good. Like I said, intraday resistance is at 760. We have approximate 2 minutes left, less than 2 minutes before we close the 5-minute candle. And that confirms the 755 by 700 move. The first target that we have is going to be 800. We have 820, we have 850, and we have 900. These are just to start off the trade. Order filled. We're right into the resistance zone. First target is into 800. If you want to take partial profits, you can. We will have to see how the price action is reacting at that point, and I will let you know if I'm going to take partial profits or not. If we get a strong move, I'm not. If we get a strong move that takes out 800 and goes into the 822, which is the high, the CPI high, then I'm gonna probably move my trail stop into 800. We have just digested the minor resistance zone that we had at 760. We're almost at 90. Ninety-two point 25. We're getting continuation onto the 5 minute in ES and in NASDAQ. YM is not yet. YM needs to get above 45. Of course, we would get more traction if we have synchronicity throughout the indices, and we would have nice continuation and not these stalls. But the moment the Dow stalls, you could see the Dow here inside. The strategy that we applied for this trade was, so basically the setup was very aggressive, was off of the 2 minute. This was the 2 minute. And this was the 2 minute buy setup that occurred. And we remember what I said in the intro that we're going to take it. We're gonna apply a little bit of room for our entry, right? So this is what we did. That's why we took it at 755. Placed our stop below the pivot. So we gave it a little bit of room here, 700. You always want to give a little bit more room. So the price action has plenty of room to inhale and exhale. So the risk is the difference between the entry and the stop. And it really is not significant how many points you have between the entry and the stop. That is totally irrelevant. The only relevant thing that you do is whether you can afford it or not by position sizing. See how many contracts, full size or micro, you can fit on your 1% in your position sizing. We're getting a mini sandwich on the 2 minute. We're getting continuation right now in Russell and the Dowski. We need to print 795 in order to start moving toward beyond 800. So we need 795 print and we're off to the races. All right. Almost there. We have our 95. Almost at 800. If you want to take partial profits, you can take partial profits. I'm seeing a little bit of a slowdown here and a little bit of momentum, losing a little bit of momentum. And by the way, we're seeing let me show you, this is the resistance that we're getting at 800, so you can see why we're stalling here. Okay, you can see those resistance here. So for a period of time from 844 to 856, the price, we had a range bound action before the pullback, and the price action is reading this as resistance. I will answer all the questions after we're done trading. Right now, our focus is making money. And my primary focus is making money. Okay, ladies and gentlemen, we have the 801. Not quite the price action that I want to see. Slow down in momentum. Volume is dropping a little bit. Beautiful daily, by the way. Look at the daily. Gorgeous. How many of you guys trade stocks? Microsoft is having a really nice setup of buy setup. Trying to set a buy setup is not triggered, has not triggered yet, but is right there. Amazon is sideways, Meta popping higher. This is one of the trades that we have into our stock swing trader program. Google is higher. PLTR sandwich over yesterday's high. Potential continuation of the move higher. So NASDAQ stocks are relatively strong. Tough area. That 800 is a really tough zone. Tough, freaking tough zone. Come on, let's go, NASDAQ. We don't have time here. We want to wrap it up. We want to wrap it up. Also, China orders companies to halt NVIDIA chip orders. By the way, orders applied to ByteDance, Alibaba, and others. All right. We have an 808. We have a little tiny baby high right now. PLTR is extremely strong. Yeah. Dash is doing a buy setup right here. DASH. Meta's leading the Max 7 with 2.8%, Google 1.4%, Microsoft closing in on 1%, Tesla 0.5%, and then Apple, Amazon, and Nvidia into the break-even zone. Okay, no changes to the trade so far. No changes. you took partial profits at 800, okay, I am still in the trade. Like I said, did not communicate with you guys that I'm taking profit. I just advised you guys, if you want to take partial profits, you can. I noted that the volume is going down. There is a little bit more of a red momentum coming in right now. Little bit of selling. We're still holding the low, so 700 is still on deck as support. All right, price action is trying to recover. Notice the volatility and then in the Dow. Dow is extremely volatile. It just came down, elevator down 164 points. It took 3 5-minute bars to get into the resistance, and it took like very little, less than 5 minutes to come down in here, 164 points. Uh, NASDAQ is still holding because, like I said, I've noticed a lot of NASDAQ stocks that are still relatively strong. And in this case, because I get this question a lot, when you achieve target one, ideally you want to raise your stop to at least a break-even price. But if the break-even price has not established into a support zone, then your hands are tied. You need to keep the original stop. $845 is the all-time high that was set the last day of July. Okay, you're welcome, guys. I'm still in the trade. Guys, the VIX had a pretty big bounce. Look at this. Now coming in, we should see like a little bit of momentum here. These are not VIX futures. Can we get in again? Shanti, if you see a setup, then you can go in again. At this point, I do not see a setup. You get in only when you have a setup. You don't get in without a reason. Gotcha, Angie. Yeah. All right, 702 for the low. My stop is 2 points below. 700 is actually 98. My actual stop is 98. What will we do without news? This is like literally news trading 101. Here we go again. Yeah, I could see it, Angie, what you were talking about. Allowing a lawsuit against Powell's Fed building costs. Ugh. Okay. The trade has stopped. NASDAQ stopped. All right, we're stocking for the next trade. Stocking. All right, we're stocking on the next setup. Pretty violent move here with the 1 hour. Remember what I said in the pre-market when I came on the mic that I saw CPI numbers that came in 180. We're keeping here fixed because if the VIX is going to get back in here over 16, gets back here on the 5, the market is literally going to start diving. So we got to keep an eye on the VIX. Tesla's coming in, Amazon is coming in, Google is losing a little bit of the momentum. I wonder if this news came out a little bit earlier when we saw that the volume is coming in a little bit. That's interesting. How it all played out. All right, we're just waiting. Bottoming tail. I have to say, as dramatic as that fall was in the Dow, Dow is holding really well. Notice here that on 5 minute we have 2 bar continuation, and here we just had just one big one, dramatic, but holding relatively well. The Dow, I have to say, it's not one of my favorite because it doesn't really have a lot of room to move. It's into a tight resistance into the 400, so not much of a target. Let's see here what we have back in NASDAQ. Nice recovery. And the Dow holding well. Russell, gold is a chop fest. VIX are coming in a little bit. the 2-minute in NASDAQ has resistance at 720. So there's this resistance at 720 from this cluster low here. We have been sitting here for quite some time before the open. We got the volatility spike, and then this is going to be the line that's at 720 to 730 area. All right, the 5-minute has already triggered. Wow, the Dow is already up. See, this is the line in the sand for NASDAQ. Is going to make it or break it here. New support level is 660 in NASDAQ. We may have a trade. So I know where the stop is. I'm not so sure about this entry. See, the price action got rejected into the 725. David, news source. I use different news sources, but for major news, I use Forex Factory and Financial Juice. I can show you a little bit later. And if you were here, I did post in the presentation the news source. All right, price action get rejected in NASDAQ. Told you guys, it's this support, now resistance, that rejected the price. All right, so NASDAQ obviously it's into a lot of support here, so it's being defended by the overnight resistance that now is support. If it breaks this, it could fall, but it's going to be a choppy fall. If 660 is going to hold, we may have a trade over 725 or 730. I kind of have it semi-typed to release it, but I have to see whether it's going to hold or not. I don't like the 1 hour, 1 bit. Doesn't look good at all. Here's the 1 hour in the S&P, very similar to NASDAQ, still into the minor support here at 64.10. In the pre-market game plan, we talked about the fact that we would like to see the 64.20 hold, but we don't exclude a pullback to 64.10. So these levels are key in here as well. And then we have the Dow 1 hour, which surprisingly reacting off minor support here into the 180 and holding really well. It's actually holding the best right now. Literally the best. So we got to check out and see what's going on. What's so strong. Okay, so now we have Goldman Sachs, which is going to start breaking out probably massively. Goldman Sachs is just this is the daily. This is the all-time high, and this is where it wants to explode. JP Morgan is still sideways. Telling you what's pushing. Some of the biggest components in the Dow are UNH. And here it is, 2.77% today. Higher. Obviously, Goldman Sachs that we spoke about. The next one, Home Depot, which is higher. And I've mentioned Microsoft as potentially having a buy setup over 528.25. Relatively strong as well. Johnson & Johnson as ugly as it seems like a boring stock, just made a new all-time high. We have, again, another component, AXP, that is higher today. We have 3M, Dow component, higher today. Boeing. Go Boeing. Sandwiching today. May want to go higher, but it needs to take out these highs. 231, 232. CVX, pretty bullish on the day as well. Almost $1.50 higher. So Dow is pretty strong. Let's take a quick look again at the VIX. See support here, or they bounced off of support at 15. Hard bounce. Let's take a look at the 5-minute structure into them. See, they're curling around. This is not good for the market. But some are responding, some are not. So I'm noticing some weakness here in NASDAQ, which was a little bit easier to trade because of the structure on higher time frames. All right, we are into tapping, tapping, tapping in support. The daily created a topping tail. Obviously, we are not at the end of the day, but and look at the Dow go. We have a very divergent market. The losers are the new winners right now. The only concern that I have with the Dow, the reason why I didn't go for it is because here at 400, this is the resistance. And the size of the candles are just insane. The volatility just expanded big time. VIX is here, higher low. VIX is not out of the water. If VIX starts printing over 1580, Matt, I have not taken profit at 800. I go for all or nothing. I didn't take profits into 800. I have a different risk. Everybody has a different risk tolerance. I have a really wide risk tolerance, so I pretty much go for all or nothing on the trade. I'm looking for 100 points, 200 point moves for continuation. and they did not evaporate. It was part of my plan. We want to keep it funny, Matt. And by the way, it's only one R. You know what one R is? It's a little drop in an ocean of trades. It's nada, nothing. Nothing means nothing. All right, so I'm back to watching paint dry here with NASDAQ. Gonna switch to 15 here. I don't like that now. It's lagging. It's literally the laggard. I don't like the Dow because it doesn't have room to go. 400 is tons of resistance. I don't know whether it's going to have continuation or not because it's trading into a tough resistance area. And I don't know if it's up for this or not. I don't have confirmation. If it would have been trading above, let's say 550 or so, I would have been all over it, but I'm not. So I'm going to put it back here. Let's put it on the 15 for now. See, this is a good sandwich here on the 1H and Russell. Very good sandwich. But again, this one is just like the Dow. We don't have, evidence that the price will continue or not. I guess a little bit better than the Dow. On any pullback, Dow could be a trade. All right. On any pullback, Dow could be a trade. A pullback and setup, not just pullback. And I'm gonna stock this little rascal NASDAQ again. 10:07, 10 o'clock reversal time. See, the 5 minute already rotated over 70. Now we are just eliminating the resistance into the 700. Our initial stop, or stop actually, not initial, it was the stop. And we're doing a 180, it seems, 180 reversal into NASDAQ on the 1 hour. 30 minute looks good. Everything looks good so far. Looks like, yeah. Well, the market is digesting the move. NASDAQ went past your stop and you're still in. Of course not. Why would I be in if I have a hard stop? No, I don't write the Hail Marys, even though sometimes you should, if you have the tolerance for it. I know a few people that do. Some are in my family, and they might be here in this room. Okay, so 15-minute bar is what we're going to be watching, this bar right here, and it's not going to be that pretty. The reason why I really don't want to take a trade in S&P, I may call a trade in ES, but I have a swing in it. So I have an active swing in it at 63.80, and I took it in this account, and I really don't want to mess it, and I don't want to change accounts right now. Don, yeah, right. Oh. Yes, Matt, that was my stop. 798. 698. 698. I said 2 points below 700 and I said 98, not 798. I wish it was 798. I know. No, no, no. Do you want me to retype the okay, here was the trade. This was the original trade. The entry was 755 by 700, and I explained the buy setup and everything else. Okay. 15-minute looks very good in NASDAQ for a continuation higher, but it has a pretty wide range. It might be a problem if you guys don't position size. Um, and don't forget, I will answer all your questions as soon as we're done with trading. We're still trading within the power hour, so moves can still happen. So OPEC raises oil demand growth estimate for next year. So global oil demand is set to grow by 1.38 million barrels a day in 2026. This is what was communicated at 10 a.m. today. Okay, these 15-minute candles are very interesting, but I want to zoom in right now to the 1 minute. The 15-minute, like super wide. See, I hate these highs, lower high. And now we may get a trend change, right? Because we set a little downtrend here right off the open, right? High, lower high, lower low, right? And now because we have this pop up on the 1 minute, we may get a rotation here. If we get a rotation here and a setup, this is going to be the first higher low, and we're going to go zip back up, and that's going to be like slow. It's going to be like stage one, stage two, stage three. Okay, let's see. Okay, now the 2 minute. We're going to watch the 2 minute now because we have been stalling here. Let's watch the 2 minute here. These two are in sync, NASDAQ and um yeah, on a day like today, Matt. Yeah, these are wicked. These are wicked. When we started this session, NASDAQ and Russell were the freaking weakest. And they were actually, I mean, take a look at this candle right here. Okay, this is the 15-minute candle. Huge topping tail, volatile, 169-point candle. And take a look by comparison into NASDAQ. Okay, so NASDAQ, this is NASDAQ right here, first 15-minute candle, 98 points higher, very volatile, huge topping tail, small body. Reversals are actually not bad if we get like a good one. All right, so this one may not be bad here. Remember I said, yeah, let's do this one. Let's do NASDAQ, NASDAQ long. I'm gonna do 720 and my stop, I'm gonna cheat on the stop. I'm gonna put a stop 660. 720 by 660. So we're gonna hold on, let me just put my order in first and I'll explain. Okay, so first off, we want to see it take this high, and that's the reason why we want 720 because we want to take out these this resistance, right? So once we take out this resistance, we have our stop here because we have a pivot. By the way, order filled, in case you took it with me. And by the way, the Dow Ugh, is relentless. It's annoying me. This is how I feel about this is how I feel about the Dow right now. Okay, so let's talk targets. Remember we said we looked on the 1 minute and we saw some pivots there? Okay, so NASDAQ targets. Okay. Don, 696 is not bad. 696 is not bad. First of all, we gotta keep an eye on this 760. 760 is resistance. So we're gonna see how it trades above that. And of course, 800. And if it goes above 800, the same targets that we have talked about earlier apply. Frickin' NASDAQ shook us out of the. I mean, it's not NASDAQ that shook us out of the trade. It was the news. It was the, and I have been trading news, but this is wicked. This has been super wicked. I agree. And I love to trade the Dow. I love to trade the Dow, but it's just that it had so much resistance at 400. But now that it eliminated a part, and so did Russell, like I said, if we're going to get a pullback, they're going to be back on our radar. I like to trade the Dow. Much better than NASDAQ. NASDAQ is freaking wild. Let's see if we get above the 750 first. Baby steps. Let's take it back to the 5. No, it didn't have the setup. And then here, if we wanted to take the breakout and I was looking at it, I don't think a lot of traders in this row would be able to accommodate a stop like this because the entry was 370 and the stop would be like 180. That's why I didn't even bother with it. Even with position sizing, you would get like a very tiny size or none at all. No, I'm just trying to interpret the market. I'm just not trying to reinvent the wheel here. Just apply what I know. All right, so just so you know, NASDAQ has some considerable resistance into the 50. So we can see now that that 50 is radiating that resistance because it NASDAQ went to 745.75 and it's just, ugh, you know, just trying to hang on in there. By the way, tomorrow after the close, we have Cisco that is reporting earnings. That's, I would say, considerable power player in NASDAQ. Some bottoming tail action in NASDAQ on the 2 minute. And by the way, like freaking no pullback here. Like a little bit of a base. So you can see here we have some intraday resistance at 570, close to 570. So if we get a breakout above 513, above 513, so that means a print of 515 would be your order, or 520. 520 would be more likely. Here it is, it popped. And it has this nice support level here at 450. It could go into this 570. But at this point, I don't know what's above, because I don't know if it'll have continuation. It's right into this 20 SMA. See, this is what I didn't like about the Dow here. It doesn't have a lot of room to go. It did go, so it was definitely pushed by algos, but I didn't have a setup that I could act on. By the way, we're 1 point away from that 750. We do have a target at 760, by the way, which is here. 755 for the high. No, there are pivot points. I'm going to talk about the indicators that we use, and once we're done trading. We're at 60 again. If you want to take partial profits, you can take partial profits. I'm not. Again, I'm not. This is what I'm doing, but you could take half off, for example. And you can, let me see. No, you can't. You can't raise the stop. Not just yet. Not just yet. You need about 3 minutes before you raise the stop. So you cannot raise the stop right now, but you could take half off if you want. Take half off if you want. That's just the way I trade it. Again, I give you guys, a heads up of what you can do, because this is a resistance zone. It's a big resistance zone. Okay. And could potentially reject the price. So if you're like, man, you know what? I just love target one. Okay. And by the way, target one is the easiest target to achieve most of the time. Like 90% of the time, you're going to see target one hit. And maybe around 60% of the time or 50% of the time, target two hit. And, the chances for bigger targets decrease as the price action moves higher because it loses energy. Price action getting a little rejection into that pivot point there. Just a heads up, we need to make 60 points. So we need to see NASDAQ into 780 to make up the R that we lost in the first trade for those of us that stayed in the trade. So that's what I'm looking for. And then I'm going to take another decision. It's not literally a measured move, Matt. So typically when the price action hits target one could be like very close to the trigger, or it could be very extended depending on how the structure of the chart is. In this case here, our entry is 720 right here. We took it out off a different time frame, so that's why it looks, let me just put it on the 2 minute. Okay, so we took it here at 720. This is our stop at 660. So we basically are trading this breakout, right? This pullback and rotation. Typically, I take it here, but because we were, in this, I would say not so orderly type of setup, I was opting for the breakout because we had this sloping 20 SMA. So I took the trade here, and the target one was this pivot. Okay, the target one was this pivot. So this dotted line right here. So it's not quite 1R. 1R is right here based on our risk, the difference between the entry and the stop. But it could potentially be, so this is not, like a measured move, let's say. I mean, it's a measured move, but let's say 50% retrace. 50% retracement is great if you have a pullback, if you're referring to a pullback, let's say a 50% retracement here off of the open. So if you have the initial move up and 50% retracement from the swing low to the swing high here, that would be great. And that is, yeah, that is where you would like to see a buy setup or a base or something happen. This is like an 100%. This like it literally went below the 100% retracement from the move from the New York trading session, right? So that screwed up everything. Okay. So when I looked at it, and I looked at it on the 1 minute, and I was analyzing it with you guys in here, and I said we have the high, lower high, lower high. So we definitely changed trends here. And I said if we get a rotation off of this point, but I think it's going to be way too early, and that's why we didn't do this. And we waited for the second one off of the 2 minute, right? But I said if we get a change, if we get a rotation here, this is going to become our higher low, and it's going to change the structure in here. Okay, it's going to change the structure, and it's going to move from downtrend back to uptrend. This is my favorite thing to trade, these reversals. All right, so here on the 1 minute, we already have a pivot just below the 740. And if we get the price as closer to 80, you could take, and again, you could take half off here. And if you took partial profits into the 760 target because it was achieved, you can raise your stops right now. Okay. I'm not raising the stop just yet, but you can raise the stop. I would say just wait until the price is over like 65 to raise the stop to 740. Okay. You guys, okay. So I zoomed it in a little bit so you guys can see it. Okay. So yeah, this is the big line in the sand. Yes. Yeah, you could say that, but not quite. No. Oh, I ditch trades all the time if they violate my stops. I'm like, I'm done. I take my loss and I move on. Yeah, Skip, I'm with you. Okay, now it's safe to say that based on the 5 minute, we can move the stop to break even. So that would be 720. Stop to break even right now. And here's the reason why we're going to have the stop to break even. Okay, sorry about that. I was talking and my mic went off. Okay, so let me explain the reason why we're gonna move the stop to break even here. Okay, so in case you guys see this candle, this is resistance, right? If we break through resistance, that's great. When we're getting to 780, that is gonna be 1R. So the trade that we took right off early in the morning, that's gonna be history because we just made the money back. And that is from the power of R. If you don't position size, you don't have that ability to recuperate your losses immediately. But if you position size, it's great. So we're going to go for 780. This is going to be one of the bigger areas for me. And here I'm going to consider where I'm going to be, what I'm going to be doing when the price is going to hit this point. Again, obviously we have resistance here into the 800 from the CPI numbers here went a little bit above 800, and here we had a tap into the 800 as well. Now, what happens? Excuse me. What do you think is going to happen if the price action is going to trade below this low right here? You already see that we have a double top formation. And here is the scenario that can potentially happen. If the price action, now let's say you guys see it, it's still holding. It poked a little bit higher above the 760. It's actually 764.25. But in case the price action, this candle, in case this candle, so I'm going to build it here. In case here, you're going to get a rejection, again, off of the same area. You can see a little bit of red here. What can happen is that if we take out this low right here, this is going to be a sell setup. So you're going to have a move down. And this could potentially have continuation much, much lower. And in fact, you could see that the Dow is doing a sell setup. The S&P is trying to do the same thing. If we take Russell below this low right here, this could be a sell setup. It's not a sell setup in the sense of shorting because we're in a dominance and it's a bullish dominance, but it could potentially create another freaking ugly pullback. Okay. So by the way, this is going to be a sell setup right here. If that is going to happen, as long as this low is going to hold in here, right? This low, if this low is going to hold, I should choose a different color here. Okay, so if this low is going to hold here, this is going to be our safety net. So the best trades to be in is when you have the stop place to break even. So that means that we're not going to lose anything on this trade. We already have a first trade where we lost 1R, but if we get the price to 780, we're getting there. Okay, we're getting there, and we would be recuperating all of the losses that we have incurred by the first trade. So it's not it's not a matter of points, it's a matter of R's and how you position size for that. So this is exactly, the explanation for the potential reversal. And again, if we get a continuation higher, we should be seeing, like, I would say in about 15 minutes, like an 800 achieved. Okay, like in about 15 minutes. A target achieved. So these are the two scenarios that can happen based on just based on this candle alone. Okay. Yeah. So we'll see. Remember, I said that if we get a pullback, a nice pullback in the Dow, we're going to take a look at it and probably we're going to go for it. For it. But for the time being, please put the stop and break even. Um, David, I'm happy. I could be of help. Oh, anybody can do this, David. Don't doubt yourself. Say, I could do it 100 times. Just do it. Just do it. Just do it. Okay, now we have another resistance area here. You see the dotted line here? Okay, I'm going to explain what these dotted lines are in a second. But here we have a little bit of a higher low compared to this low right here. So that means that this higher low now becomes that line in the sand. Okay. But because it's not that far away from where we have to stop, we're not going to change it because you could have a spike of volatility that could take you out. But all you could do is like you could do a stop. You know what? The low is 43. Yeah, let's lock in 20 points in this one. I know it's not a big deal, quarter R, but yeah, let's do it. Raise the stop. 2740. NASDAQ hopping. Why? No, no, I wish it would. I wish it would. Okay, now different scenario because we have a little reversal candle here. What can happen here, and I'm gonna explain it like, you know, hold on a sec. Okay, here we go. All right. See this dotted line is here. This is the line in the sand. We have been here for more than 15 minutes, right? So this is a sandwich, guys. You see this red candle right here? This is the pause, right? This is the indecision, right? And at this point, traders that are bullish, they hold on to their position just like we do, right? So you could see it very well right here. If we start breaking above this 65 area, let's say where this resistance is at, then we could start progressing higher into our 780. And by the way, 780 is nothing. Okay. 780 is just us recuperating the R that we lost in NASDAQ. Oftentimes, if I see that the timing goes beyond the power hour, what I typically do, what I typically, not always, but what I do is I take a portion off into the 780 because I just recuperated my whole entire trade, my whole entire loss, and I keep the rest for trailing. Okay, but this is again based on the price action right now. This shows me that I could potentially take all out at 780 and have a break even day because the price action is really not extending. And if we're looking here in YM has achieved the 20 SMA. It does have another minor support here into this area. I forgot what it is, like maybe 350, I believe, around the 350 area. So if this 10 EMA is not going to hold, we're going to get probably momentum down here all the way into this area. And the next setup that may happen may be a rotation into this minor support that could take the price back up. Also inside bar, but this is again a 15-minute. So let's compare apples to apples. This is a 5 minute right here, and it's above the 10 EMA, holding relatively well. So we'll see. Here's the sell setup that happened in Russell. So Russell is poised to probably go back down to this inflection point here, around the 2250. You just got to keep at it, Matt. You just have to like don't get discouraged, and if you have that 1R, don't think about when you're trading, guys, don't look at the P&L and look at the R's, not the P&L. The risk to reward, the risk level, and you have to always keep in mind I'm risking 1R, whatever that R is for you, depending on your account size. So whatever that R is, that is what you're risking. Think about trading as the best electronic game ever, where you're not risking money, but you're risking R's, and determine what your R is. Look at your account size, decide your risk tolerance, decide your percentage. I don't make recommendations, but I would not advise anybody to risk more than 1% when they're day trading. I would not. So I'm risking 1% of my account size per trade, and I allow myself uh 5 to 6 trades every day. That's right, Don. And while we're here in this trade that is like ever so boring, we could actually start talking about stuff. All right, the indicators that I use. Okay. The okay. I use moving averages. I use the 200 simple moving average. I use the 20 simple moving average, and I use the 21 and the 10 exponential moving average. Okay. So, by the way, I want to make sure everybody's locked into 740, lock in 20 points in this trade. In case it wants to sell, make sure you lock it in. We have about 4 minutes into the close of the 15-minute candle. Okay. So these are the moving averages that I use. The 50 that you see, the green line that you see here, this is the 50 simple moving average, which I do not use on day trading time frames. I just use on hourly. I just use on daily. Okay. So I use on higher time frames, but it's there. I can't erase it. So there's nothing I could do about it. All right. And the dotted lines that you guys see here, these are pivot points. I have been trading with pivot points for, well, let me tell you exactly since when. Since 2007. Wow. All right. So I have not, like, I've been using them for quite some time. Oh my God, for 18 years. I must have been a baby when I started trading, right? Okay. Same thing. Tomato, tomato. 2021 is the same. All right. So yeah, it doesn't matter. So bottom line is that the reason why I use these moving averages and why I like using them. And by the way, if you don't want to use the 10 exponential moving average, you can use the 8 simple moving average. I've used 8 simple moving average for tons of years before I started using the 20. I'm sorry, using the 10 exponential. I started using the 10 exponential quite recently. I think it was in 2016, 2015. So about 10 years ago, I replaced it. Um, and it has been working better for me than the 8, but they're very, 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 very similar. Okay, very similar. So I got used to the 10 EMA. Again, if you don't want to use the 10 EMA, you can use the 8 simple moving average, and you could actually put both on your platform, and you're barely going to see a difference over there. But yeah, these are the moving averages that I use, and then I use the pivot points. And these are simple daily pivot points. So if you have the Thinkorswim platform, you can oops, let's go here. All right, and here they are. So these are simple pivot points you could see here. So if you type in pivot points, these are the pivot points, okay? These are the simple, simple, simple pivot points. Not Parsons, not SVE, not Woody's, not nothing else, okay? Just pivot points. So I have them color coded. So if you go in here, I can show you. So there are 3 resistance areas that are with green. Okay, you can see this one, this one, this one. And there are 3 support zones that are marked with red. And you can see that this one, and this one. This is the S1, 2, and 3. And there is the medium pivot right here, which is the yellow. Okay. So these are the pivot points that I use. Like I said, I've been using them for 18 years. Um, and basically you use them only for intraday trading. That's perfect. Done. That's perfect. That's perfect. I would, if I could make a recommendation, like again, I don't give advice, but if you incorporate the 200, that's going to be a whole lot of ball game because you're going to see some really impressive reactions off of that 200. Like so. Like here, you have really like if you're a scalper, if you're getting into that, mentality, the 200 is going to help you a lot, especially when you're getting like really massive reactions off of, let's say, the 4 hour or into the 1 hour, for example. You're going to take a look at here. These are some examples of reaction. And one example is today off of the 5 minute right here. All right, so our stop is still 740 team. And by the way, pivot points are, let's call them artificial resistance and support zones. You're going to see that a lot of times when the price action is visiting these pivot points, there's going to be a volume, typically a volume spike. So there's going to be market participation around these pivots. In a slower market environment, you're going to see, and by the way, we trailed out of NASDAQ with 20 points. We just made 20 points in this one. Okay. We trailed out. Um, so when you use these pivot points in a slower market environment, like we are right now, because like I said earlier, the volume is leaving, the volume is drying out. Okay. And you could say that the power hour has pretty much closed. The power hour doors have closed, and you're not getting so much of a momentum. And you may get a continuation based on the daily charts, but not necessarily uh that would not necessarily great setups that would line up on the intraday charts. So pivot points are artificial indicators, just like every indicator out there, that were generated by a formula from the prior day's high, prior day's low, the close of the prior day, and the current day's open. But a lot of people don't know that there are two sets of pivot points. And there are two sets of indicators in every single type of trade out there. Okay, we're out of NASDAQ, but see the setup here that exploded in the Dow again. Okay. Yeah, the Dow and Russell exploding again. NASDAQ laggard. NASDAQ laggard. Odell, yeah, we will send the recording sometime today. We almost didn't have a recording because I forgot to hit the record button. It's almost no recording for today. But anyways, I'm glad you guys are here. It makes tons of difference when it's live than when you're watching a recording. I don't really am for recordings. So I was telling you guys that there are two sets of pivot points, ones that are generated for continuous price action that you see here. But what I'm just about to show you is going to blow your mind. Yeah, I agree, Skip. Okay. So not sure if I'm sharing this. No, I'm not sharing it. Okay, here it is. I'm sharing it now. Okay. So this is my home screen, and this is what I trade off. I think we're gonna take another trade, guys. Still gonna be NASDAQ. Okay, let's do NASDAQ again. We're gonna do 770 for the entry. The stop is going to be 730. And we are going to have two targets, 780 and 800. Okay. All right. So what you guys don't see here is the overnight price action. And that's because I use the second set of pivot points, and you're going to see that, this is actually a double whammy because you're having a pivot point here. It just won't happen. And typically when the market is sideways, in the prior trading session, you're going to have a pretty good alignment in pivot points and indicators like moving averages and so on and so forth in both charts. Okay. But you can see that in these charts, I do not use pre-market data. So just these ones right here, the 1 minute, the 2 minute, the 5 minute, and the 15 minute. By the way, order filled, I got filled in NASDAQ. That's the third trade today. All right. So, yeah, this is one thing that is really important. And here you can see the indicators that I use. I use volume. I don't trade without volume. I need to see what kind of market participation I have. I need to see the amount of volume that is coming into each candle on each time frame. For example, here I have 720 contracts, 794 right now. And on the 1 minute, I have 858. On the 2 minute, I have 2,000, 2,800 actually on the 5 minute, and so on and so forth. So I need to know all these elements that are going to contribute to the setup that I'm taking. And they're going to, and by the way, we are into the target one area at 780. Again, for those of you that like to take partial profits, you can take partial profits out. Okay, here is the 781.5. I'm not, again, I like to see a little bit more of an extension before I take profit. So I need to see the price a little bit more into the, at least like on the 1R level. And if we're not getting into the 1R, and if we have a sideways range like we had here, of course, I'm going to be diligent to trail it a little bit tighter because in case we get the setup, the sell setup here. And here, this could have been a more dramatic type of pullback because we already have the high and we have the double top. And this could have, come back more into the 700, or why not just revisit the 600 again? So don't be complacent when you're trading. I'm never complacent when I'm trading. I don't take it for granted. Okay. Uh, James, that's a great question. Do you scale out on the way down when going long? Absolutely not. I never do that. I use hard stop only. There are some exceptions to the rules. For example, when I take half the size of the trade, when I take half size, half R, uh, and then when I have two support levels that are really tight together, let's say for NASDAQ, right? Let's say I have a NASDAQ, a support level that is at, I don't know, 730 and one that is at 700. And if I take half the size, I allow myself a flex stop. Okay, so a flex stop, I would adjust based on what's going on the chart. And especially, there are market environments where you're required to have these soft stops. They're not very often, just a very few times a year, or maybe two, 3 times, 4 times a year at the most, where you're going to use these flex stops. Maybe less. Okay, maybe less. That's the only times when I use these. There are certain market environments, conditions where you use these flex stops, and that is when you have that look. That is how I do it. Okay, that is how I do it. So that answers that question. And I agree, Skip. YM was a little bit easier to trade. Let's go back in here. We have been focusing on, I didn't want to drag you guys into 7 trades at the same time, but I usually don't talk as much when we're trading because we're trading, so I don't answer questions. Yes, I do. In fact, we do have a swing trade in mini S&P and at 63.80 right now. So we are up gorgeous 100 points, over 100 points, 107 points up as of this moment. We took the trade on August 6th, which was last Wednesday. So last Wednesday we took it as a breakout, and it was outside of the trading room hours, and I communicated with the traders on our private feed. So there are things that are happening outside of the trading room hours sometimes, not all the times, but sometimes they're happening. And mini S&P actually really great trade, 63. Yeah, 63.80, Dan. Yeah. The PNL doesn't drink your bananas, drive you. Okay, gotcha. Drink, yeah, you could just you could use the drinking too. But no, when I trade, I don't look at the PNL. I don't. I don't look at the PNL. I I chat with you guys. I look at these charts that I share here. I don't look at the PNL. I look at the other charts that I showed you. I just don't look. PNL is actually in front of me, so my active trader is right in front of me. But I don't look at it. I don't look at it. So I look at the price. I'm looking at charts and price action and reaction versus anything else. All right, so we're seeing a little bit more price advancement here. Let's see. Right. Absolutely. Yes, you have to trust the charts. You don't have to trust anything else. I know, Skip, and we are so freaking patient. That's why I just got in again. This is the second one. This is the second, actually the third attempt, not the second, but it's the third attempt. Crazy pants. All right. And you can see here that the price action is kind of choppy because YM hit the pivot point and it's coming in a little bit, not much. But NASDAQ pretty much has a continuation. NASDAQ, I would say NASDAQ is very robust. And if the price action is going to start gaining some more energy and start breaking above 800, obviously we're going to go towards 820, 850, the prior targets that we had. Jay, are you trading off Thinkorswim? Okay, sure. Okay, here is the link to my platform. Um, I don't know. See, the thing is that I do trade, Jay, I trade stocks as well. So you're gonna find that there are, and the setup is for 6 monitors. So you're gonna have a lot of things there. All right, we're almost at 800. Oh, here is what there is a news release that just came in. Trump Putin summit could be oil's next big catalyst. We'll see. We'll see. They have a lot to talk about. All right, let's see. Today was a day where we had to fight for our money, like literally. The Dow was the easy way out. Again, it was tougher trade because it was trading into resistance. My favorite was NASDAQ. Of course, guys, you don't have to thank me. It's what I do. It's my job. It's my job to create successful traders. That's my job. That's in my resume. It's like first thing there. It's like you have to make people a lot of money. Finally, we had a little bit of a move. Fingers crossed. Yeah, and that fingers crossed and prayer should be in your trading plan too. Typically, how many contracts? It depends on the size of the stop. Depends on the size of the stop. Position size. All right, almost there. Are we gonna get a good move? Are we going to get a good move, guys, towards 820? Because we have been we have been very patient. I'm going to send you guys the stats for these for the day today, the size that I took and with the recording. So for example, on this last trade that I took, because we have a 50-point stop, my risk, the size that I have is 5 contracts in NASDAQ. Okay, here we have 800. If you want, you could take partial profits. I'm going to be looking for a continuation into 820. Skip, thank you so much. I appreciate it. I would love the market to be obedient. Oh, it was not very obedient today with us. I mean, the market was obedient. We can't control the news, guys. And remember one thing. Don't be freaked out by news. News is just a brief interruption in price action. Michael, this is great news. Awesome. Yeah, exactly. Guys, what do you think? Are we going to see 820? Are we going to see 820? Remember, if we make 50 points on this trade, we're going to be up on the day, like up, up, up. Not only that, because we only need a very, very little to make up for the first trade. I'm going to send you guys the stats with my position sizing, with how much money we made today, with how much money we lost today, and the P&L for today. We didn't lose anything today. We're actually printing green. Green. We love green. At 820, we are 1R. And we just made a little quarter R in the prior trade. So we're going to be up quarter R for the day. Hey, that's good. Do you guys know how much you need to grow your account, to double your account every year? If I tell you, you're going to go like, what? That's bananas. You know how many R's you need per week to double your account every year? Alex, you know the answer. Exactly, 2. 2 R's, and you double your account every year. 3 to 4 R's, and that is per week, not per trade. And remember, the norm is to find trades that deliver at least 1 to 2 R's. And look at us today, right? Look at us today. Oh, Bonnie, thank you. Oh my goodness. Remember, if we get to 820, we're going to be up quarter R on the day. We have recuperated our losses. Like at this point right now, your P&L should be a green in NASDAQ, just barely green. Light green. Oh, Alex, thank you. I mean, what do you guys think? Do you guys think that YM is going to explode above that pivot point again? Casey, that is great. Casey made money today. Everybody made money today. Perfect. And by the way, those of you guys that took profit and killed the trade in NASDAQ, the first trade, went for the first momentum, you guys are up. You guys are up big. Okay, you guys see the VIX? We love the VIX lower. We love the VIX. Die. Die VIX. Okay? Die, die, die. If we see the VIX 1460, woo, market is going to go cray higher. Remember, tomorrow is going to be a little bit more difficult to trade. We don't have any announcements tomorrow. Not big ones. Nothing. So the market may continue today's momentum. And then in the afternoon could become sideways. But guess what? Guess what? The good news is that Thursday we have PPI numbers, and hopefully we're not going to get like another crazy news, unexpected news. We're going to go for 820 and 850, Ben. 850 next target. Basically, we're going to go 850, 880, and we're going to go for 900 if we get there. We have time. We have time. The S&P trade is doing good. How did I trade the downtrend from 2025? It was a lot of fun. I will share the stats with you. I can share the stats with you. So in April, we had a record month, and I'm going to show you. We had a record month. And the reason for that is we traded gold and we made a year worth of profits. Like it made our year, not quarter, not half a year. It made our year. It was a record. If you would have taken all our trades just with one contract, you would have made over $74,000. Gonna show you the stats. Stats don't lie. No, it's not like in options, Laureen. It's not like in options. A contract is a contract. So a contract. So yeah, a lot of people get confused because it's, you know, the margin requirement that you need to trade, Laureen. And I'm so happy that, we have a lot of stock traders in here that have never traded futures. All you need is 35,900. 35,900. Yeah, you're in new territory. Okay, we're shooting for the next target into the 850. And then we're shooting for this 900. And we're going to trail along the way. So don't get complacent. Don't get complacent, but we just had a really crazy 2-minute momentum. And I think we had a little, I don't know if it could be an algo spike that we had at 11:10. So $35,000 for NASDAQ. Okay, so NASDAQ margin requirement is 35,900 to be exact. The mini S&P requires 24,400, so less. If you want to trade the Dow, the margin requirement is 17,000, so way less, almost half of what you need to trade NASDAQ. That's why a lot of traders trade YM and focus on YM. I love to trade YM. The only reason that I stayed away from YM is the potential of continuation. That's the only problem that I had with it. And by the way, guys, 845 is a huge target. It's into that 850 level, and we are 10 points away from that. It's the all-time high. So if we take out the 845, we're going to be printing an all-time high. Okay. All right. And a lot of traders are drawn to Russell. And I know Russell is not really appealing to a lot of traders, but it's appealing to me. It's appealing to a lot of traders here in the trading room because it requires really way less margin requirements. And when it has some pretty good setups, it can actually run and go. And it only requires $12,000 in margin requirements. All right, we're getting a little bit of a topping tail, guys. Raise the stop to 800. Raise the stop to 800. And we're going to be raising it actually even more. but let's keep it at 800 for now. If we get the price at 840, I don't think 845 is going to be a problem. And we're going to see all-time highs, which is going to be historic here in the room. Mike, I suggest that you position size because if you can afford, based on the difference between the entry and the stop, to trade full size, trade full size. Okay, so the neutral stop right now is 800. 800. We have a high of 835. I'm also going to be sharing with you guys because we had a lot of questions in the room, what news sources I use. So I'm going to share that with you. We're into the greed phase of the market. We're in the middle of the greed phase of the market. I like to go to extreme greed a little bit just because we are in S&P swing long. Micros commissions, you have to be careful and choose. Okay, guys, historic all-time highs for NASDAQ. Woohoo! Woohoo! This is awesome. Awesome sauce. Crazy pants. Awesome. Okay, keep on holding, guys. Keep on holding. We are into the 50 historic highs. We are about 50 points away towards our new extension in the market. And by the way, I am swing long in the Qs. Swing long in the Qs. All right, let's go. What a beautiful day. Guys, we are deep green right now. We had a bit of a hiccup with the market at the open because of the news that came in, unexpected news that came in. But guess what? No, I'm in the Qs. Qs. Swing trade in the Qs. I swing trade stocks. For how many, I'm just curious, how many of you guys in here are just day trading stocks or swing trading stocks, just stocks only, and this is your first futures encounter? Type of one. Omar, that was me 10 years ago. James, that was me 10 years ago. Lorene, that was me 10 years ago. And I've been trading for 25 years. I've been trading for 25 years. Okay, so I would say that I'm relatively new at futures because I've been doing it for 10 years. So here's what happened. I was doing my taxes in 2014. And it was in January of 2015. And my accountant and my financial advisor back then, he said, like, you're paying so many taxes for these for stocks. Yeah, that Matt, that's a huge advantage. That's the reason why. That's the reason why. The second reason is the simplicity. The second reason is the simplicity. Okay. Um, So my advisor and my CPA said you're paying too many taxes and there's a way where you can pay less. And I'm like, what? Sign me up. I don't care what I have to do. And they said, well, you have to stop trading. I'm like, what? I'm like, no, you have to stop trading, day trading stocks. I was literally trading, and I have stats to prove this. When I was day trading stocks 20 years ago, and you guys know the commissions, right? It was $10 to get in, $10 to exit. It was huge. Okay. And it depends on the size. Like you could actually pay more. Okay. Guys, we are going to be raising the stop to 840. 840. Trail 840. Don't let it go below 840. Okay. All right. 840. Final trail. Just gonna put it in here for you guys because I know sometimes, okay, so I put a little alert for you guys here so you can see where it's at. All right, so, all right, back to storytelling. Okay, that's a great point. We could talk more about that. Yeah, I plan on hosting like a webinar. You should have an LLC for trading. If you guys are trading full time or even part time, have an LLC. Have an LLC because you can conduct trading room, education, scanners, um, everything that is, computers, screens, laptops, iPads, phones, internet, everything. It's, it makes a lot of sense when you have an LLC, office space, etc. Okay, so here's the thing. Like I said, new to futures. Okay, and I'm like, you have to trade. So you have to stop trading. So you have to stop doing what you're doing. Stocks are not working. I'm like, how are they not working? I'm bringing in a bunch of money, and that's the reason I'm here because I'm paying too many commissions, right? Too many taxes. My taxes were so high. Okay, yeah, everything is deductible. Yeah, you could write a write off. It's a write off. No, I'm in Florida, Don. I'm a Floridian. I'm a Floridian. So, anyways, long story short, um, they said you have to start trading futures. And I'm like, oh, those are boring. I don't want to trade futures. I want to trade Apple and Amazon. And, oh, I don't want to trade futures. So like, wait a minute. You could still trade, but hold the positions a little longer. So swing trade, if I was already swing trading, already had my investment account, right? But it's just like, don't day trade them. Like you don't have to trade 20 trades or 15 trades in a day because I did. I had 10 trades a day, 15 trades a day, 20 trades in the day. Like you name it, I had it. And I'm like, oh, you mean like I have to be like disciplined and trade less and do this? And like, but the market is not moving as much as Apple is moving, or it's not moving as much as, I don't know, whatever Tesla is moving or whatever. Tesla wasn't even around then. Okay. But anyways, so it's like, what am I going to do? So he's like, hey, you could trade, imagine trading just the Q Spice, Diamonds, and Russell. And I'm like, oh my God, that is like freaking boring. But then I got home and I'm like, from that meeting, and I'm like, maybe I'm going to give it a shot because the one thing that I did when I started my trading day was to analyze the Qs, the Spice, Diamonds, and Russell. Like this, I would do this before I got into my watch list. So I thought, you know what? This may be a good idea. So what I did is I pop up the screen exactly like this, but it didn't have gold, it didn't have oil here. Let's go back to oil. Let's just watch paint right here. All right, so I didn't have these two. So I just had these four. Okay, so I had the Dow, the S&P, NASDAQ, and Russell. So I started looking at them, analyzing them. I started trading, very little. Off of the 2 minute, off of the 5 minute. I would apply the strategies that I applied for my day trading stocks. So I got better at this and better at this and better at this, but I had really stock withdrawals. Okay. So I focused so much on swing trading back then. Guys, we're going to be raising the stop a little bit more. Let's see. No, keep the same stop. Keep the 840 stop right now. Hold on. I'm just gonna interrupt the storytelling for 1 second. Okay, yeah, keep the 840. That's enough. That's enough for us. 840 and we're good. Okay. All right. So bottom line, I got so super hooked on trading futures because I didn't have to have a watch list. I didn't have to get up an hour earlier to do the watch list, to do all the analysis. I didn't really have to watch earnings. I didn't have to watch anything else actually. So if you were like really lazy, this is kind of the lazy style, of trading, day trading, because you don't really have to watch a lot of stuff. Okay. What you have to be aware of is the fact that futures are a little bit more volatile. But guess what? You have position sizing, so you are safe. Okay. So you're safe. All right. Just watching here the price action to see. Okay. Well, I'm still in. I'm still in. I was surprised that I thought I saw 40, but it didn't go to 40. It went 40.5. Okay. It went 40.5. Okay. On the next move up, guys, if we see a 50, okay, here we go. 56, 57, we could actually start going towards the 65. We have 61.25 for the all-time high so far. So yeah, so long story short, for those of you guys that are here for the first time, okay, I was literally like super addicted to day trading stocks. There's a way to trade less. And basically, when you're trading less, you're making more money because you're not opening the door to risk. You're not risking a lot. So I allow myself 5 to 6 trades in a day. But do you think I take 5 to 6 trades in a day? I don't. Today's an exception that we have 3 trades. It's an exception. Usually I have 1 trade or 2 trades. When I have a stop out in a trade, guys, let's take it off at 50. Okay. 850, 850, trail 850, trail 8, and I'm out. Okay, took myself out. 850. That is really great. Okay, so we made a bunch of money today. I will send you guys the stats. Good job, everybody. Good job. All right. Good job, guys. We did it. And trading is fun and it's stress-free, right? Okay, 80 points on this move. All right. Mara, if you have velocity to go up on the daily chart, do you get out if you see a pivot point level? No, I trail. I trail, Mara. Thanks, guys. Thanks so much. Thank you, thank you, thank you. And by the way, we are in gold long at 33.80. Did you guys see this? This is again, it was again at our entry point here, 33.80. And by the way, this trade is from July 11th. Those crazy pants. All right. All right, guys. Um, okay, let me see if there are any other questions. Do you offer training on how to execute on Thinkorswim? I don't, but there are a lot of tutorials on YouTube. So if you go on YouTube, you could do that. I am long in GC. I'm not long in GLD because you could have so many gaps in GLD because it's like up, down, up, down, up, down while it's in a range. Okay, so my stop for gold is actually really wide. It's at 3,200, under 3,200 because it's at the bottom of the range. Awesome. That's my goal. Actually, my goal for you guys is to learn rather than make money, but that's a double bonus today. You learned and you made money. Okay, so Okay, so tomorrow we're gonna meet here back again. I'm gonna talk to you guys about the CPI numbers, the PPI numbers, I'm sorry, that are coming out on Thursday. And on Thursday, we're going to talk about option expiration. Okay, so how option expiration is impacting day trading futures. Okay, and this is a new take. Again, you're not going to find this with any other trader out there. I have been around for over 25 years, been doing this for a really long time, and I have infused my futures trading from my stock trading knowledge. So I hope you guys are going to benefit from that as well. Okay, so it was a really great day for us today here in the trading room. It started a little bit on the rockier side, but we recovered. And if we have time on Thursday, we're going to talk a little bit about position sizing and how easy it is when you respect your risk, your R. But what I want to do right now is I want to take you guys to our performance portfolio because we did have a question in the room how we did in April on the market pullback. Okay, so this is April 2025. These are all the trades that we took, and this tracker is per contract, per contract. So if you have taken, if you were to take like all, if you took all these trades just with one contract, you would have 74,000. If you would have position sized, this would have been times 10. So you would be like over $750,000. Like I said, like quadruple your account at least. Okay. And this is in comparison, for example, month of March, this was 8,000. The month of February was 32, almost 33,000. January was 30,000. So you get the idea. And by the way, all this information is on our website. What I want to share with you guys is that there was a question in here, Matt, I think you asked where are we getting, all our information from, our data, our calendar, economic calendar from. I use Forex Factory. I'm going to type it here in the room for you guys as well, the link. So if you want to save it, this is forexfactory.com. Been using this for a really long time. If you want to use, you have my financial juice as well. This is the paid version, but there's also a free version if you want to use the free version. It's really great as well. It has a little bit more information than Forest Factory. In the sense that if Trump is speaking or if there's, something that is, happening, you find it out here. Like if there is a meeting or if there's something popping up on the calendar, you're going to see it here. So this one doesn't give you that. I'm not sure if the free version gives you that, uh, but the paid version does that. Okay. Just wanted to show you that. Okay. And yeah, so this is the stat. Uh, by the way, traders have access to this. All right. So let's see. Let's go back to charts till, okay. All right. So let's answer some questions in here. All right. All right. Not sure if you guys can see me. Like I turned on video, not sure. Okay, cool. All right. Okay, so I'm gonna answer some questions in here. Have you used TraceStation? I've used TraceStation. It, I, look, I've been using this Thinkorswim platform for so many years, that I've gotten so used to it. But I would say TraceStation is a little bit harder to use, but it has great commissions. It has great commissions. I love the charting that I have from Thinkorswim, so I use that. Okay. Oh, free version is delayed. That sucks. Thanks, Ben. Okay. Okay, let's see what else. Do you have a list of preferred brokers? I think that Paul, I don't have a list of preferred brokers, but here's the thing. Um, See what kind of account size you have. So if you have a smaller account size, look for brokers that offer you better commissions for micros because those are the instruments that you're going to use more often. Um, I would say interactive brokers are great. TradeStation is great. Ninja, I don't like the charting in Ninja. I don't know. There's something about Ninja I'm not loving, but um, and by the way, there's a route where you can use if you like the charting that I'm using, like down below. You can still use Thinkorswim, but I think you got to deposit, like deposit like $500 or $1,000 so you can have access to real-time data. So when you have access to real-time data, you can use the charting and then you could just have a window from your broker, like Interactive Broker or TradeStation, and just place the trades on with that broker. Okay. Um, Poll, I don't use book maps. I don't have time to use it. I just focus 100% on price action. I do use William percent R. Yes. Oh, but Ben, you refresh and then you get the updates. Well, that's good enough. Yes, Thinkorswim negotiates commissions. I have to say that I haven't done it in a really long time, but it depends on how many contracts you're using and how often you trade. You have to trade a lot in order to negotiate commissions. But yes, I haven't done it in a while since they have been taken over by Schwab. I haven't I haven't negotiated with them. Actually, I didn't really have time, so thanks for reminding me. But the more you trade, the more you can negotiate with them. Tasty Trades, yeah, Tasty Trade is also a great platform, and I like it. I love the charting. I think it has really, really great charting. I mean, I got used to Thinkorswim. I have multiple accounts with Thinkorswim. This is where I have my swing trading account for futures, my swing trading account for stocks, my day trading account for futures. I have my investment account, my active investment account. So I have several accounts. What I don't like what they did with Schwab is that they paired. So you basically, they paired all your accounts. So you have a drop down now, so it's easier. But like, for example, now if I want to open another, let's say I want to open the same platform that I have let's say on a different computer, I can't do that. So I have to use a different account. Yeah. Oh, there you go, Ben. Exactly. Or you could use like $250. Yeah. Just open an account, deposit some funds in there, and call them and tell them that you want to test the platform to see how it works for you. Jay, how do you use the William percent R? Typically, the William percent R, let me just share a different chart. It shows you overbought and oversold levels. Okay. So let's see. Let's share this. Okay. So I have it here where you can see it. So basically, this is in essence a swing trading indicator and it shows you overbought and oversold conditions. What I do look in these types of um, indicators, I use the what I do look for is I look for divergence. And for example, here I had confidence to get in long because we have a low and a higher low here. So you can see that we have this higher low. This was highly, which was a little bit bizarre for me, but it came into a massively oversold level. So then I started, that gave me, power, and it gave me a little bit more confidence to add or initiate new swing trades. And here was the big add. Okay, here was the big add. Here's the low. Here's the reversal, and you can see that it's coinciding with this. This is overbought. All these levels are overbought, and these levels right here are oversold. Okay. And you can see here that you could stay in the overbought levels for a relatively long period of time. I use them for divergence when we're getting a big pullback into the market, so I can just identify the areas where we can buy or sell. It's perfect. I actually applaud the fact that, you know, traders understand that it is better to have multiple accounts than one simple account because you could have your day trading hat on when you're swing trading and then you're tempted to micromanage trades. Yeah, exactly. Yeah, yeah. Ben. Yeah, yeah. I have been, to be honest, with a lot of other platforms that were, um, let's say they were taken over by Thinkorswim, like Scottrade. I had accounts with Scottrade and multiple other platforms. You're going to have better taxation on futures than you have on any other instrument. Yeah, of course. Okay. Arthel, thank you very much. I'm grateful. I have been trading, practicing futures for 4 years. This year, I'm committed to following my rules and becoming profitable. That's the key. If you have a system that works for you, just insist in that system. Just don't change anything. Just, yeah, and get it, just make it better and better and better and better. Okay, team, I will see you guys tomorrow. Hope you guys had a great day. It was a really good day for us here. Hope you learned something. This is the purpose of everything that I'm doing here. And I'll see you guys tomorrow. Okay, power hour done. And we're done. And see, this is a thing that I love. I mean, 1 hour and done. And basically we have been here for a couple of hours, few hours now, but typically, yeah, it's just a power hour and done. So thank you so much, guys, for your trust in me. And I'll see you guys in here tomorrow at 9 a.m. sharp. Thanks so much, everybody. Have a great rest of the day.